So, usually when we dive into market data and these algorithmic models, there's this fundamental expectation of, well, physics.
Right, like it's sort of financial gravity.
Exactly. You expect that, what goes up must come down. You expect historical correlations to just hold firm, and that the old rules of supply and demand are just quietly governing everything in the background.
You're expecting the math to behave, basically, like it's this massive, complex clock where eventually you can map out all the gears.
Right, and we rely on that predictability, right, to even build these models in the first place.
Yeah, I mean, an algorithm is fundamentally just a set of rules. And those rules are based on the assumption that tomorrow will, in some way at least, resemble yesterday or follow some logical progression.
But then, and this is why today's deep dive is so crazy, you open up the environment we're looking at today, and suddenly, gravity is just gone.
Oh, completely gone.
Yeah.
The gears are flying right out of the casing.
It's insane. We're looking at a landscape where the old rules haven't just, bent under pressure. They've completely broken down. It is pure chaos out there.
Yeah, what we're seeing in these June 16, 2026 performance logs, it's the absolute definition of an unprecedented storm.
Right.
This isn't just a minor fluctuation or, a bad week in the markets. We're observing a fundamental rewrite of the market's operating logic in real time.
And that's our mission for today. We are opening up the proprietary simulation logs from Team AI Lab, and we're going to track two diametrically opposed algorithmic entities, basically two completely different philosophies of how to handle money. We're just going to watch them battle it out.
And it's a totally hostile, anomalous environment.
Exactly. I mean, honestly, it reads less like a standard data review and way more like this dramatic tale of survival.
It really does. But before we get into the actual survival tactics, we do need to firmly establish the ground rules for you listening.
Yes. Crucial disclaimer time.
Right. This deep dive is strictly an observation log. We're analyzing proprietary algorithm behavior and simulation results under very specific simulated conditions.
Right. We're just analyzing how code reacts to chaos. So absolutely nothing we discuss today is a recommendation to buy or sell any asset.
None of it.
We are not getting financial advice, and nothing here is a promise or like a projection of future profits. You really just got to think of us as scientists looking through a thick pane of glass at a highly volatile chemical reaction.
Just objectively analyzing the telemetry of the blast.
Exactly. We're dissecting the mechanisms, the why and the how of these models failing or succeeding. So let's start with the personalities of the two algorithms we're tracking.
Because you really have to understand their underlying philosophies to make any sense of the scorecards.
Right, because their approaches to the market are just completely inverted.
Yeah. So on one side, we have Team Mountain Climbers. And their entire operating logic is built around this concept called equilibrium detection.
Okay, equilibrium detection.
Right. In mechanical terms, this algorithm assumes a rubber band effect in the market. It's constantly calculating the baseline, the fundamental true value where an asset should theoretically settle.
Based on, historical data and moving averages?
Exactly. Historical data, moving averages, standard deviations. So when the market prices an asset too high or too low, the algorithm basically assumes the rubber band is stretched.
And it wagers that it's going to snap back to the center.
Spot on. It's always looking for the still point, the equilibrium.
But then, and here's the contrast, you have Team Wave Riders, and their core programming is surging force tracking.
Yeah, they couldn't care less about where an asset should settle.
Right. They don't care about fair value, they are measuring velocity and acceleration. If that rubber band snaps, they aren't looking for it to return to normal.
They're trying to hitch a ride on the projectile.
I love that. So you have one algorithm aggressively trying to find the floor and another just trying to ride the ceiling.
That's a great way to put it.
Okay, let's unpack this with an analogy. If the current market anomaly is, say, a Category 5 hurricane.
Which it is.
Right. Then, the mountain climbers are frantically searching for the eye of the storm. They're deploying all this logic to find that one unmoving, calm spot of equilibrium where the math actually makes sense again.
And the wave riders.
The wave riders are looking at a 100-foot tidal wave generated by that exact same storm and saying, we don't need calm, we need kinetic energy. Grab the surfboard.
Grab the surfboard, let's go. Yeah, that is the philosophical divide right there. And the data shows us exactly how violent this particular hurricane is when you look at the index contrast for the current season.
Because the index contrast measures how these algorithms are doing compared to standard benchmarks, right? Like the Nikkei 225 and TOPIX.
Exactly. And those benchmarks are supposed to represent the baseline reality of the market. If you're an advanced algorithm, Your entire job is to beat that baseline.
But look at the massive divergence here. I mean, Team Mountain Climbers is currently lagging the Nikkei 225 by negative 5.3 points.
And they're lagging Topix by negative 1.8 points for the season.
Which, okay, that makes sense to me if their equilibrium models are failing in a massive storm. But, and this is the wild part, the Wave Riders, who are actually having a wildly successful daily run, they are also lagging the Nikkei.
By negative 3.7 points.
Right, and lagging Topix by negative 2.3 points over the season. How is the winning momentum algorithm also losing to the standard indexes?
Because the indexes themselves are being warped.
Warped how?
Well, we have to look at the mechanics of this abnormal state. An index like the Nikkei, it's a composite of hundreds of components, right?
Sure.
In a normal market, if the index goes up 2%, you can logically assume the broader tide is lifting most boats. But in this anomaly, the underlying correlations are completely broken.
Oh, so you might have like 3 massive tech stocks pulling the whole index up.
Well, 80% of the other components are just plunging.
Wow, so the index score is effectively a mirage right now. The average looks fine, but underneath the specific sectors these algorithms are trading in are just completely decoupled from that average.
Exactly. The standard market logic has just evaporated. The historical correlations, that idea that if X happens, Y usually follows, they're malfunctioning.
It's like the benchmarks are behaving in a way that just confounds everybody.
Both the equilibrium seekers and the momentum riders, because the internal math of the market is no longer adding up.
It's the equivalent of waking up, checking your compass, and realizing the magnetic pole has just vanished.
That's exactly what it is. Which actually brings us to a critical decision point in the logs. The morning of June 16th, at 9.00 JST.
The daily draft.
Right. The 9.00 JST scouting process is where the models calculate whether to deploy new strategies or units into the active roster for a 10-session trial.
This is basically their mechanism for injecting fresh logic and new parameter weights into the system, right?
Correct. And look at what happened. Team Mountain Climbers drafted 3 new units with the logs called New Talent into their 10-session roster.
So they're actively sending out new scouts, freshly coded with recent data, to try and find a new equilibrium in this harsh environment.
But Team Wave Riders, they scouted zero new units. They are relying entirely on their existing active roster, their main force.
Okay, I have to push back on this, because looking at these 0 drafts for the Wave Riders, honestly, it looks like a system error to me.
How so?
Well, if the map is burning and the old rules are broken, like you said, wouldn't you want to flood the zone with new logic? I mean, you'd want to test as many new variables as possible to figure out what's actually working out there.
You'd think so, humanly speaking.
Right. So sitting on your hands and deploying 0 new units while the market implodes, it just feels like the Wave Rider algorithm gave up.
See, it's not giving up. It is actually a highly sophisticated defense mechanism. You got to consider what introducing new talent mechanically means in an algorithmic framework.
Okay, walk me through it.
It means injecting a unit whose parameter weights have been heavily influenced by the immediate chaotic data of the storm. In machine learning, there's a massive risk of overfitting to noise.
Oh, I see. Meaning the new unit might learn all the wrong lessons from just some random spike in volatility?
Exactly. Imagine you turn on a highly sensitive new microphone right in the middle of a wind tunnel.
The audio just clips.
Right. It can't process the baseline because there is no baseline. The Wave Rider's overarching logic is looking at this surging force and calculating that uncalibrated, fragile new logic will simply be destroyed out there.
Ah, so they're trusting their main force, the units that were already deployed and have somehow naturally acclimatized to this surging chaos.
Exactly. They acclimatized without their internal risk limits triggering a shutdown.
That's wild. So the mountain climbers are panicking, sending out these search parties, desperately trying to find a new calm center. But the Wave Riders are just battening down the hatches. They're refusing to risk capital on unproven models when the environment is this lethal.
And we can see the cold, hard reality of those two choices in the survival rates of the active rosters.
Yeah, let's look at those scorecards. Team Mountain Climbers currently has 23 active units in their roster, but out of those 23, only 12 are holding positive points.
And the ones that finished their 10-session run today, they took an absolute beating.
Brutal. Their final scorecard resulted in a painful negative 13.7 points today.
And we need to look closely at where those points were lost, because the logs show failures across foods, 2 different banks, other products, and information and communication.
You know, the banking sector failure is particularly telling to me because banks usually trade in relatively tight, predictable bands, right? Tied to interest rates and macroeconomic policy.
Exactly.
So equilibrium algorithms historically feast on bank stocks because that rubber band effect is so reliable there. But if a bank stock if it breaks out of a 10-year trading band due to this market anomaly, the mountain climber algorithm doesn't know the paradigm shifted.
No, you just keep trying to catch a falling knife.
Right, it's just sitting there thinking, this has to revert to the mean. It has to.
The very mechanism of their failure is their inability to accept that the mean has moved permanently. And notice the failure in the food sector too.
Oh yeah, food is traditionally a super defensive, low volatility sector.
Right. So if an equilibrium model is bleeding points in foods, it proves that the breakdown in market logic is systemic. The defensive properties of the market are failing just as hard as the growth sectors.
Man. And that daily systemic failure drags the mountain climbers' total season points down to a really bleak negative 25.6.
Now let's look across the aisle at Team Wave Riders.
Yeah, they're running a much leaner operation, relying solely on that main force we talked about. They only have 13 active units, but 9 of them are holding positive points.
So they are maintaining a significantly higher survival rate without injecting any new logic.
Now, they did take a small hit on their 10-session exits today, losing negative 5.4 points in the machinery sector. But their daily score, driven by the surging momentum that those surviving units managed to capture, was a staggering positive 48.1 points.
Which rockets their total season points up to an impressive positive 24.7.
That is insane. Their ability to capture a 48-point single-day leap while running a lean defensive roster, it's mathematically remarkable.
It really is.
But honestly, I'm less interested in the massive daily score, and I am much more obsessed with those specific surviving units.
The outliers.
Right. We have 9 positive Wave Rider units and 12 positive mountain climber units. Out of everything we've looked at today, these 21 total active models are the only things adapting.
They are the absolute outliers in a sea of failed strategies.
I was trying to picture them, as lighthouses in the dark, but honestly, that's too passive. They aren't just standing there. Mechanically, they're acting more like advanced noise-canceling headphones.
Okay, I like that.
Standard algorithms are getting their drums blown out by the sheer volume of market volatility, but these 21 units have somehow calculated the exact inverted frequency of the current anomaly.
They're piping in the perfect counter signal.
Exactly, to find the stillness or the pure momentum track underneath all that deafening noise.
The mechanics of that adaptation are fascinating. I mean, those 12 surviving mountain climber units, they didn't find the historical equilibrium. They dynamically calculated a new temporary equilibrium that the older models just couldn't perceive.
Wow, and those 9 Wave Rider units managed to isolate a momentum signal pure enough to ride without wiping out on the sudden reversals that are literally destroying the rest of the market.
This is brilliant code.
It is brilliant. But looking at the broader picture, my human instinct sees that severe negative 25.6 season score for the mountain climbers, and I immediately want to label the strategy a total disaster.
Oh, of course.
If you're managing the AI lab, the temptation to just pull the plug on the equilibrium models must be overwhelming.
But we have to forcefully detach from that human emotional reaction.
Why? I mean, a loss is a loss, right?
Because looking at a negative 25.6 score as a defeat fundamentally misunderstands the purpose of Team AI Lab's architecture. In their specific philosophy of algorithmic development, there is no such thing as defeat. There's only valuable observation data.
I mean, I understand the theory of learning from mistakes, but losing points in a simulation still means your logic is failing. How do they justify burning through the roster just to watch it fail?
Think about the mechanics of space exploration.
Okay.
When an aerospace agency sends a probe into the crushing atmosphere of a completely unknown planet, and that probe implodes in 10 minutes, the mission isn't a failure.
Right, because they learned about the pressure.
Exactly. The negative 13.7 points lost by the mountain climbers today is not a tragedy. It is telemetry from a probe sent into a hostile environment. The algorithm did exactly what it was designed to do. It measured the pressure of the market anomaly until the exact moment its logic was destroyed.
Oh, wow. So it's basically mapping the structural integrity of its own logic. The losses aren't just missing points. They are the exact mathematical coordinates of where the old rules break.
Yes. And this is the cold, forward-looking stance of the entire research project. A normal, calm market can only teach an algorithm so much.
Sure, it's easy to win in a calm market.
Exactly. Today's severe market anomaly is providing a treasure trove of stress test data that is just impossible to synthesize artificially. The mountain climber algorithm is learning the precise boundaries of equilibrium failure in a 2026 anomaly.
That completely flips the perspective on the scorecard. They aren't helplessly bleeding out. They are mapping a minefield by systematically stepping on the mines.
It's a calculated, brilliantly forward-looking approach.
They are purposefully sacrificing standard units to gain a structural map of the new world.
And that map becomes the foundation for the next iteration of the code. The fact that the mountain climbers drafted 3 new talent units today proves they are actively adjusting the sensors on the next batch of probes based on the telemetry of the ones that just got crushed.
It really highlights how entirely devoid of emotion this observation process is, and how that coldness is its greatest advantage. An algorithm doesn't feel despair when the banking sector logic fails.
No, it just updates the weight of the parameters.
If the system panicked and halted operations like a human would, the flow of vital telemetry would just stop.
It would go entirely blind.
Which leaves me with one massive lingering question for you listening right now, something to really ponder as you look at your own understanding of market cycles.
What's the question?
Well, we've seen today that the WaveWriter strategy of surfing the chaos is winning. They're adapting, they're trusting their main force, and they are capturing surging momentum to the tune of 48 points in a single day. But what happens when this unprecedented storm finally breaks?
Oh, because eventually the pressure system has to normalize.
Exactly. Even the most severe anomalies eventually form a new baseline. So if the WaveWriters are entirely reliant on the surging kinetic force of this specific hurricane, what happens when the wind just stops?
That's the billion-dollar question.
Right. Will that momentum suddenly vanish, leaving the WaveWriters stranded on their surfboards in dead water? And when that happens, will the mountain climbers, who have spent all this time painfully mapping the boundaries of the new normal, finally find their elusive equilibrium and completely take over the market?
You're really looking at the eternal timeline question here. Does momentum or mean reversion win when the cycle finally turns?
Yeah.
And the data we collect in the next phase of this simulation will hold that answer.
It is a phenomenal cliffhanger for the next batch of observation logs. But as we wrap up today, just a brief final reminder for everyone. Today's deep dive was purely an exploration of simulation data and algorithmic theory.
Yes, we are objectively watching code adapt to simulated chaos.
None of this was financial advice, nor is it a recommendation on how to navigate your own market strategies.
We are just reading the telemetry of the blast.
And if you want to read that telemetry with us as the data drops, you need to subscribe to the channel right now. We are going to keep tracking this fascinating philosophical battle between the climbers and the writers.
It's only going to get more intense.
Absolutely. Also, do yourself a favor and check the video description below. You'll find a link directly to the Team AI Labs Substack.
The granular data in those observation logs is essential for anyone interested in the real mechanics of algorithmic adaptation.
I highly encourage you to sign up for their paid Substack subscription. That is where you get past the surface level scores we covered today and you access the deeper, highly granular analytical data.
Yeah, if you want to see the raw observation log.
And understand the exact mathematical parameters of how those few noise-canceling lighthouses are surviving the dark, the paid Substack is where you need to be.
The deeper you look into the mechanisms, the more fascinating the system becomes.
It really does. It's been a wildly informative ride today. Keep your eyes on the data, keep questioning the baseline, and we will catch you on the next deep dive.